Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with tonight's Deep Dive. It is February 11th, 2018. It's a Sunday, and I thought I'd do a quick little deep dive here on a market that I think is going to have some movement coming next week. And that market in particular is coffee, with the ETF as JO. We have the intermediate, short and intermediate and long-term trends all pointing to the downside. We've got the technical still pointing to the downside, but we have the seasonals that are starting to pop up. And there's two things I'm going to show you here today that we're looking for some type of a movement to the upside sometime during the course of next week. I think that we still have a little more downside, but we'll see as we're not later in the week we're actually able to get some type of a push to the upside. If we take a look at the Deep Dive Pro Alerts, here's coffee right through here. And here's why, because this doesn't always pop up. This is called the lazy, but technically it's a lazy day indicator. And what this means is a little sideways arrow means that the market's been consolidating for now 15 days. And so you'll see day after day after day that this number will start to pick up until it's no longer in this lazy day formation. So let me go ahead and quickly show you what I'm referring to. Here are daily bars for coffee. You can see that the bars may be hard to see on your screen, but you can see that there's distinct green bars here. Then they transition into blue. The yellow just simply means that there's a counter, and the counter has been that there's been 15 days since we've not been in overbought territory or oversold territory. And so that generally means that the market is kind of beginning to coil up, and when you have that condition, well, at least when it concludes, it usually concludes in a way that there's excess volatility and a tradable opportunity. You can see that we recently had one that went on for 18 days. It had a little bit of a pop to the upside, but then it's sold off, and that's where your trading range or trading opportunity actually came from. So the blue bars, as we have right through here and we've had in the past, they do not signify, at least from my perspective, which direction the market's going to go or if there's going to be a false movement. All that it does for my money is it tells me that volatility is looming, and that's probably the best way to phrase it. If we take a look at a different chart, this is our normal chart where we have our elastic and energy and all the other indicators. Here's the energy level. You can see this green line is now below this yellow line right through here, and that just simply signifies from a different perspective that there's a lot or there's not a lot of volatility, there's not a lot of energy behind the market. Again, it's similar to the lazy day indicator, but a little bit different in that one is a momentum indicator, and the other one is just a snapshot as to what volatility is not taking place. So two different perspectives. If we take a look at the website here and we come up to energy level, you can see of all the markets that we track, all 40 of them, that coffee has the least amount of energy. It's the one that's coiled up the most and is ready to have some type of a move here. If we take a look at the tendencies on the consolidation, so low energy is a consolidation phase, high energy would be an expansive phase. So if we come to the energy level and we come to the tendencies, and the way that you do that is charts, then market tendencies, and then we come down to energy. If we take a look at that, we can see that coffee right through here, this really doesn't happen all that frequently. Only 2.6% of the time do we actually get into this kind of phase, and it's something that you should be aware of that doesn't happen all that frequently. This based on the energy, nothing to do with that lazy day indicator that we were looking at initially. They're both looking at it from their own perspective, but the stats that we have here is that the coffee really doesn't get into this phase all that frequently, and therefore it warrants some form of attention. Something is going to take place here. So with where we stand right now with the systems as of Friday's close, we have 3 different systems. They're all short the market. They all have a little bit of a profit, nothing dramatic on a per contract basis, but they are short-term systems, meaning they're 60-minute, another 60-minute, and another 90-minute. 2 of the 3, you've got 2 pattern-based systems, and we got 1 little trend-based system. So the pattern-based systems will have a tendency to jump out of a position much faster than would a trending system. So if we look at this and we look at the seasonal tendencies, first I'll just point out that coffee is at least in the top 10. It's not number 1, but at least it's on the top 10 list, so there is some accuracy when it comes to the seasonal tendencies. And this is what I want to really show you here. Here's a 5-year chart. You can see that the market has been selling off a little bit. It's hard to see, I suppose, but the market has been selling off a little bit. But sometime here in mid-February, which is coming up here very soon, we expect some type of a pop. At least that's what has taken place over the last 5 years on average. That's what a seasonal chart it provides to us. It's not necessarily telling you exactly where it's going to bottom and exactly where it's going to top out. It's there for the purposes of what is normal tendencies to the market. If we take a look at 10-year chart, which has obviously more data associated with it, you can see again coming into mid-February or so, there's still a bounce. So even taking into account 10 years, in fact, if we look at a 5, 10, and 15-year chart, they all point to some type of a pop that typically happens here in mid-March, or excuse me, mid-February. So the fact that we're short the market, I'm a little concerned about it, yes, but we'll let the systems on their short-term basis be able to react to the potential for the market to come down to some support levels. So you can see right through here, again, these are daily bars on coffee. We had a little bit of a rally the other day, and since then it's been sort of meandering and playing with the 50-day moving average. But it's going to be in a tight little wound up period, as I've been alluding to, between the 50-day moving average and this support level. These are daily bars, and the support level is 120.3. If we take a look at weekly charts, each one of these are weekly charts, you can see that we're now sitting on and very close to a support level on the weekly charts. And so right now, that particular level is 121. The market closed at 123.80. So we're essentially sitting on or very close to some type of a support level. Could there still be a little more downside? Well, that's what the systems are counting on, but I would think that from a seasonal perspective, we're going to want those systems to react quickly, bail, and then have the systems potentially go long the market to take advantage of any type of a pop that is due in this particular market, given the fact that we have that really strong consolidation phase that we're in right now, and obviously with the lazy day, if I can bring it here, this lazy day, these just don't pop up all that frequently, and so therefore when they do pop up, this is an environmental change type indicator. It doesn't tell us again which direction the market's going. It just simply says something big is going to happen. There's a tradable opportunity that's popping up here, and based upon the support levels that I've been pointing to and the remainder of February with what's taking place with the seasonal charts, I think that we're going to probably hold support. We'll bail on our short positions, we'll reverse positions, go long, and theoretically be able to take advantage of the theoretical pop to the upside that could be coming. We'll have to see how things kind of play out. The systems will react to whatever the markets do. I'm just laying the groundwork for you so that you have an idea as to what could be taking place in coffee, and the fact that if you are interested in trading coffee, now is a good time to take a look at that, whether it's in the futures itself or in the ETF JO. So take that for what it's worth, and we'll continue to monitor coffee here over the course of the next 2 weeks, and we'll see how things kind of play out. Thanks for watching.